Good morning from Los Angeles. It's Alyssa Corum and Ken Shreve here with your market update. It is Thursday, January 17th, and on today's show, we're taking a look at Morgan Stanley, Nike, and Xilinx. But first, looking at the major indexes, the S&P 500 and the NASDAQ are hovering around flat right now. The Dow down about 0.2%. So we have the NASDAQ above the 50-day line and the S&P 500 nearing that level, but it's pretty quiet so far today.
Yeah, pretty quiet open. Futures were pointed towards a lower open by around 0.3%, 0.4%. So we've come off those lows and just showing modest declines at this point. Not too bad considering the numbers from Morgan Stanley were not very good on the earnings front. But we have, of course, Netflix earnings after the close today. But we did see yesterday, Wednesday, just a quick comment on Wednesday's session, a stalling session for the S&P 500 and NASDAQ. We had higher volume. Both the S&P 500 and NASDAQ gave back early gains. So it was just classic stalling action, and that added a distribution day count for each index. So not the end of the world. We're still in a confirmed uptrend, but you can see a look at the chart of the S&P 500 here, getting some resistance at the 50-day moving average. Hopefully we'll see that get above the line soon.
Well, that stalling day definitely is something to keep in mind. And Morgan Stanley shares are down about 6% in heavy volume after missing on earnings and sales today. And just when we were starting to see the banks getting some momentum, now we have this pretty sour report from Morgan Stanley.
Yeah, really big day for Goldman Sachs. Yesterday it was up 9.5%, something like that. Biggest, strongest performer in the Dow Wednesday. But the numbers from Morgan Stanley today, not so good. Last check, the stock was down 5%.
Now 6%.
Now 6%, and you can see a nice gap up for Morgan Stanley yesterday ahead of the results, but you can see a gap down today. A lot of these banks have been reporting disappointing fixed income revenue.
Right.
The percentage decline at Morgan Stanley was pretty steep, down 30% from a year ago, and I think also their equity trading revenue was flat. A lot of banks have been showing increases here. So all in all, it doesn't look like a very good report.
All right. Well, Nike's chart is looking a little bit better. Nike shares up 1% today, a standout in the Dow, and it's forming a base pattern.
Yeah, it's just consolidating gains. We just want to take a look at one of the stronger performers in the Dow today. You mentioned Nike up about 1%. So just a classic example of a stock forming the right side of a base here. It's going to need to get over the 80 level on its way to its recent high, but also a good example of what a base reset looks like. So Nike recently pulled back 23% off its high, undercutting the low of a prior base. So any breakout from here would be first stage, and again, the goal is to always kind of target these first, second stage breakouts. Right. And Nike showing relative strength and a very healthy relative strength line as well.
Yes, the relative strength line at new high ground, higher now than when the stock was at all-time highs. So that's definitely a positive thing to look at, especially given the depth of this pullback.
Yeah, absolutely. Absolutely. It's showing relative strength. It's definitely a good one for the watch list. If this market uptrend can hold itself together, you can look at a stock like Nike as possibly being able to provide good leadership.
All right. Well, let's see about Xilinx here. We're going to get earnings from the chip maker coming up after the next week. January 23rd after the close. So, and we also have an upgrade from Mizuho to buy from neutral with a 100 price target. The stock is trading just under 91 at this point. Yeah.
So this is again earnings next week. A lot of chip companies are going to be reporting next week. Texas Instruments, Xilinx, a whole bunch of them. We'll be talking about those in the earnings preview column. But Xilinx, really one of the big leaders among chip makers right now, and forming a good base here with a 95.28 entry. And again, positive comments from Mizuho lifting the stock, and we'll see what the numbers look like next week. But definitely healthy technicals.
So potential options play here?
Absolutely, just because it's it's forming a good cup-shaped base. It's just below that 95.28 buy point. You know, obviously optimism pretty high headed into earnings.
All right. Well, for a look at stocks that are heading into their earnings reports that could be potential options play, you have an earnings preview column each week where you break down some of the potential names that we could be looking at.
Yeah, we took a look at Netflix recently, and obviously that one's been doing very well, so Street will be watching its earnings report closely after the close today.
Yes.
And also we've got leaderboard name Atlassian scheduled to report after the close as well, so we'll see.
Yeah, some interesting names. And for more analysis just like this, but curated to your individual portfolio, we do have a YouTube AMA coming up. So next Wednesday, right after our show exclusively on YouTube, we will be doing the Ask Me Anything. So pretty exciting. There's a lot to talk about right now.
Absolutely. I think you know, we get questions every day, and people wondering if this latest market uptrend is going to have staying power, who the big leaders in 2019 could be, how do you find winning stocks? So we'll cover a lot of ground.
That's right. So just a taste of that with us next Wednesday. So make sure you subscribe now so you can participate in that. Thanks so much for joining us today, and be sure to head to investors.com throughout the trading session and after the close. As Ken mentioned, some nice earnings reports. We'll see if they're nice from Netflix and Atlassian. Thanks, everyone. We will see you back here tomorrow.